Alright, quick update on the Bitcoin longs and the Bitcoin shorts. So, the longs are going to the moon and the shorts have been rejected from a key area of support / resistance. Let's talk about it. Now, at this moment in time, you can see the shorts have come up to my #1 support resistance box. And I've highlighted this before in multiple videos where I have talked about these shorts. Now, why this is such an important range is because you can see since the epoch commencing 2019, we've basically been either above or below this, and you can see that this is a key pivotal point where either the shorts get above this and we go on a massive rally, or the shorts come into this and get a massive rejection. This is basically the do or die zone for the shorts. If the shorts normally do start running up above this range, you can start to see that we have 288% increases in the shorts. We've got 130% increases in the shorts, 420% increases in the shorts. And on the flip side, you can see when the price comes into this resistance range and gets a rejection, the shorts drop by subsequently 80%. Or in this area, you know, we dropped about 86%. We came back up into it, had a wick back above it, and on the weekly time frame got massively pushed down, had about another 82% drop. Now, I'm not going to measure all of them. You can kind of see my point that, you know, you run up into these zones, you get a big rejection. If you don't get above the top of these, you run up exactly to the top of this, don't get back above it on the weekly, daily time frame, massive rejection. And at this point in time, in this weekly time frame, the shorts tried to have a massive run up. They came up to the top of this support / resistance zone, clearly flipped resistance once again. Well, to be honest, this zone has been resistance since July of 2021. Once we cascaded below it, ever since then we come into it, get rejected. Normally the price has a slight move up, come into it, get rejected, come into it, get rejected. And at this moment in time, once again, we've had another rejection and the longs are stealing the cake from the Bitcoin shorts. What do I mean by this? Well, look at the Bitcoin longs at this moment in time. They've been going on new all-time highs for quite some period of time now. Approximately the past 2 months, it's been on a massive rally. You can see the previous all-time highs for longs were sitting around July of 2021. They were approximately coming in at about 55,000. And at this moment in time, they've almost doubled up to 107,000. If we look at this day over day, you can really see the longs have been on a massive rally. Now, how is this even possible? Because if we look at this date range, for the past 65 days, the longs have increased over 175%. With that being said, since the longs have been increasing during this period in time, if we come over to the BTC USD price, ignoring the Elliott wave, simply focusing on the move down in the chart, what you'll notice is since the longs have been starting to fire to the upside, the price has moved down 45 to 46%, meaning that if these people are using, you know, a 2x leverage, they should be liquidated on some of their position unless they're increasing their margin within the next 5% drop to the downside, which would represent a liquidation price of around 21,200. Now, speaking of liquidations, Michael Saylor is also coming into a mass capitulation over on his Bitcoin trades. The last time I checked 2 days ago, he was at 300 million in loss, and in the past 2 days we've massively cascaded. So I imagine Michael Saylor may be coming to liquidate some of his crypto. Slightly off topic, I did just want to make that as a separate point. Nonetheless, here is my theory on what is going on the Bitcoin longs, because in my opinion, I do not think this is a multitude of retail traders. I think we're coming to the point in the cycle where most retail traders are running out of money because I've noticed on my channel, at least in the past couple of months, everyone has been saying non-stop, buy the dip, buy the dip, buy the dip, buy the dip. And I witnessed the exact same thing when I was in the 2018 bear market. And what happened was, commencing the end of the bear market, or should I say commencing the start of the bull run, coming into the end of the bear market, what happened is no one had enough money to buy the dip. I saw it all over my socials. Everyone was saying online, I have no more money. And that moment in time where everyone lost complete faith in the markets, when no one had any more money to buy the dip, when no one could go long, no one had, you know, the capital to make any trades, that was when the exact bottom was in. But People are still buying the dip, and the longs are still going up at this period in time. Now, you might be thinking the longs going up is good for the Bitcoin price. Well, in lower time frames, it definitely can be. I'm not disputing that whatsoever, and it really depends on what type of market scenario you're in. But if we plot the BTC USD price, if we plot the BTC USD price over the Bitcoin longs, what you'll notice is at this moment in time, they're actually inversely correlated. Well, if we zoom out, what you'll notice is this is the Bitcoin price. This is the orange line plotted on the chart. And if we look at the downside down here, we can see if I make this full screen, actually, you can see once again, the Bitcoin longs. Now, let's just start from back here. What do you notice? Bitcoin price tops out. The Bitcoin price starts to massively run to the downside. What's happening with the Bitcoin longs while this is happening? Bitcoin longs are running to the upside. What do you notice once the Bitcoin price bottoms down here? Bitcoin price goes on a massive run to the upside. While the Bitcoin price bottoms, the longs start losing momentum, and people stop longing, or people get liquidated, or people don't get liquidated, but less people are longing per se. When you look at the Bitcoin price as well, all the way up here, you can see massive cascade in terms of the Bitcoin price. And this correlates to this moment in time right here. Now, we had a dead cat bounce to the downside and then back to the upside, just like we had right here. But what you'll notice is the macro move. Bitcoin price moves down, and from this approximate range, yes, we went down temporarily, but the longs started to massively run up to the upside. So you can very much tell the longs in the macro time frames are often diverged from the Bitcoin price. And once again, we're seeing a massive divergence in the Bitcoin longs. So what I'll be looking at is hopefully at some point in time seeing the longs start to run to the downside. Now, this would typically mean that whales have, made their money, and they would be entering into spot positions because they've made large amounts of profit over in the, the futures markets, whatever they're trading, whatever they're leveraging their BTC USD prices on. But once again, you can see this is the inflection point. BTC price going on a massive run to the downside, and the longs are massively diverging and running to the upside. So the Bitcoin longs is going to be another metric for us to quantify how the Bitcoin price is likely to react. These are often very closely correlated, and in my opinion, once we start seeing moves to the downside over on the Bitcoin price, once we start seeing runs to the downside on the Bitcoin longs, we should start to see the price recover slightly. Now, I do have one theory that I did want to share about the Bitcoin longs before we do wrap up the video, and that is the fact that I believe this is not retail traders doing these longs. Now, why do I think this is not a bunch of retail traders making this longs? Well, I'm of the opinion that this is a pod of whales, or this is a multitude of different pods of whales. A pod in whale terms just simply means a group of whales. But nonetheless, what you'll notice is, once again, like we said, the past 2 months or so, Bitcoin longs have been running to the upside. They've gone up 176%, but the Bitcoin price is down 45%. Now, retail traders do not have as much money as whales. That is just a fact. That's why they're called whales. And as such, retail traders look for ways to make lucrative money, and as such they use 10x leverage, 25x leverage, 100x leverage. If you're using Femex, you can even run up to 125x leverage. This is not always what whales do. Now, sometimes when whales want to manipulate the market, they'll do high leverage buys or sells when we're coming into a key area of support or resistance. But while we're massively cascading in a trend, the trend is your friend till the end, I imagine they would be using lower leverage. They do not need to use high leverage. They've got high amounts of capital, and as such, a 2x should be more than good enough for them to make a large amount of profit. Now, why do I say I think this is whales? Like I said, the price has moved down more than 45%, coming up to 46%. So if this was retail traders using 10x leverage, the long should have been wiped out already. If it is whales using 2x leverage or even less than 2x leverage, then the liquidation price might be coming in very soon. So keep your eyes on the Bitcoin longs. If they do start to head to the downside, and also you notice that shorts are starting to drop to the downside as well, then in my opinion, that should be a pretty good signal that we have flushed out the majority of leverage traders, and it is time to jump back into spot positions. That is all I've got for you today over on the Bitcoin longs and the Bitcoin shorts. I hope you found some value in today's content. As always, not financial advice. Cowboy out, and peace.